Good afternoon, everyone. A very warm welcome to the webinar today. We're extremely happy to have with us a very eminent personality, Mr. Pradeep Ramakrishnan, Executive Director of IFSCA. Friends, the Government of India notified the direct listing scheme in January 2024, providing the legal framework for direct listing of equity shares of public Indian companies on the international exchange in the IFSC. A robust and vibrant primary market is essential for the overall development of the capital market ecosystem, and with the expectation to herald a new era in primary, particularly for Indian companies, as well as provide the much needed fillip to the primary market in the IFSC across financial instruments. The IFSCA listing regulations 2024 have been notified on August 30, 2024 with the intent of providing a unified regulatory framework for listing of securities and other permitted financial products. The objective of the new listing regulations is to enable Indian and foreign issuers to access capital through issue and listing of securities on the stock exchanges in the IFSC. The regulations are expected to promote ease of doing business for the issuers to access capital market through listing of securities on the stock exchanges in the IFSC with greater flexibility and efficiency. The regulatory objective is to ensure that capital rising by the issuers in the IFSC is in a fair, orderly, efficient and transparent manner. The regulations aim to protect the interest of investors by ensuring that there is full disclosure of material information that are required for decision making by the investors. To delve deeper into the regulatory framework of IFSC listing regulations, we have with us CS Pradeep Ramakrishnan, Executive Director, IFSCA, and Mr. Akash, Assistant Manager, IFSCA. It's my proud privilege to read their brief profile in front of all our esteemed members. CS Pradeep Ramakrishnan is a Commerce graduate and Company Secretary and was associated with Madras Fertilizers Limited during 1997 to 98. Earlier, he was the Company Secretary of Kothari Petrochemicals Limited, Chennai till 2002. From February 2002 to January 2024, he worked with SEBI. I think most of the Company Secretary members will be aware of his wonderful contribution while he was in SEBI, where he was handling compliance and monitoring division, dealing with corporate governance, listing related issues, BRSR, forensic accounting cell, etc. He also handled Department of Debt and Hybrid Securities, corporate bonds, municipal bonds, sustainable finance, etc. In the year 2024, he joined IFSCA as Executive Director. It's our proud privilege to welcome Mr. Pradeep Ramakrishnan, and most of you might have definitely heard his wonderful speeches at various programs, and a very knowledgeable person and a simple down-to-earth person who always helps company secretaries from whatever position he is there, whether it was SEBI earlier now or IFSCA. He always supports professionals. Thank you, sir. Thank you, Mr. Pradeep. The second speaker for today's session is Mr. Akash Bodeda. He is an assistant manager at IFSCA in the Department of Capital Markets, focusing on primary listings, and is an integral part of the team involved in policy making in several areas, including direct listing, regulatory framework for enabling REITs and in ITS and at IFSC. Is also handling the work relating to policy and registration of capital market intermediaries, including credit rating agencies. Prior to joining IFSCA, Mr. Akash gained valuable experience in the automotive industry, working with renowned companies like General Motors and Mahindra & Mahindra. He holds a BTech degree in mechanical engineering from IIT Guwahati. It's our proud privilege to have him as a speaker for today's session and get benefited from the wisdom of two of the eminent personalities. Friends, Mr. Pradeep will initially speak. Thereafter, we will have a presentation by Mr. Akash, post which we will have a question and answer session. We would request you, now the chat box is open, and any queries relating to the topic, you can share through the chat box. Thank you very much for all the members joining. Over to you, Mr. Pradeep.
Thank you, Monji. And as usual, given a very flattering introduction of me. Thank you so much. Very kind of you to do that. So we have a small presentation. I think we can share the screen. So by the time Akash shares the screen, let me give you a small lowdown on, first of all, the history behind the IFSCA regulation and also where we are and what we are doing and why we are doing what we are doing. So, in the domestic market, equity shares are a very preferable model of unlocking value for the pre-issue shareholders, particularly venture capitalists, private equity holders, and even promoters who have sort of invested, in companies which they have set up. Now, when this has happened, India is a country which needs a lot of capital. And, we are a very large nation. Now, we have got almost 6,000 listed companies, which is possibly India has got the most number of listed companies in the world. But one of the advantages of our demographic dividend, which we are sort of reaping, is that since one in every six Indian is in the world is an Indian, for a period of time, they have sort of scattered around the world. They've gone around the world. They've gone to Europe, Americas, Oceania, so many places. They have Africa, and all these people now they want to raise money. Many of them they want to raise money. They want to invest in India, or they want to, either they want to give back or they want to have that Indian connection, continued. So what has happened was, I think in July 2023, so far until probably July 2023, the idea was to have Indian companies listed in the domestic ecosystem. But in July 2023, the Honorable Finance Minister, at a function in which I was privileged to be part of, on the inauguration of the Limited Purpose Clearing Corporation, so she had these very words saying that we will be bringing in rules whereby Indian companies can still international jurisdictions. By international jurisdictions, we meant the IFSC and foreign jurisdictions also. So in 2024 January, I think, at that point in time, there were no rules and regulations as far as Indian companies listing abroad were concerned, because the Companies Act did not allow. So specifically, Section 23 got amended, and then various regulators went into business, and the LEAP rules, the LEAP rules, were brought into force by the Ministry of Corporate Affairs, which allowed listing in other permissible jurisdictions. Presently, only IFSC is a permissible jurisdiction. Now, while we are also exploring dual listing and other things, other aspects for Indian companies, one of the advantages of listing in the IFSC jurisdiction, which you will be finding when Akash gives his presentation subsequently when we are going to answer your questions, is the fact that Indian companies, many of the see if you look at the India is probably the back office of the world, as they say, and towards the late 90s and 90s, we had a lot of companies which were set up to handle the outsourcing needs. Global capability centers have been established. Places like Bangalore, Chennai, Hyderabad, even GIFT City now, Pune, and all have grown to be huge GCC clusters, right? And many of these people have had VC investments, we have had even PE investments, or even promoters investments. So these companies are looking to sort of cash in. They want to sort of they have built a brand. For example, you take the apps with which we order food daily, Swiggy and Zomato. At one point in time, there were some venture capitalists, PE funds, after rounds of investing, they started these companies, right? So now, at that point, and now recently, Zomato came in and they had a public issue. I think Swiggy is also coming with the public issue. So these companies have had their public issues in the domestic ecosystem. But there is a possibility, and there are possibilities, where these people would like to do it in a foreign currency, right? They would like to have more foreign investors in these companies. There are also possibilities that some companies which are in India are doing business abroad. Like, for example, you take Tata, right? Tata has got Tata Motors, for example. And for example, Tata Steel, it has got plants around the world. You take many of these companies are there who do it. In fact, after we brought in these rules and regulations, we have been in receipt of requests from many foreign companies in Delaware, which is another startup cluster, Singapore. So these are all places where many companies, particularly they are started by Indians, they want to come and make use of this ecosystem. So what we did was it's not that we brought in a new regulation now. Earlier also we had a regulation, and this regulation was called the IFSCA Issue and Listing of Securities regulation. This was in 2021. But then at that point in time, the ladder of inference for IFSCA was the ICDR of India and the LODR of India. So with that, the regulations were prepared. But now we have gained an experience over a period of 3 years. And we have gone to foreign jurisdictions, we have met people, we have tried to understand as to what constitutes an international offer document. Like, for example, if you have the opportunity, please go through the offer document of Uber, for example, which is there which is available on public websites. So you can see how it is sort of contoured. It's more, it screams very much that it's a contract between the investor and the investee, rather than regulatory requirements as to what you have to disclose. So it is between me and the investor, and in case what I want to disclose, what the investor wants, it will be disclosed. Instead of getting into granularity as to you disclose ABC, this is what you call as a fit for purpose regulation. And maybe in a very loose term, you can call it as a light touch regulation. So what we did after all this consultation, we did a public consultation. We discussed with startups in India. We discussed with investors internationally, and then we brought in what you call as the new listing regulations, which are there. We even consulted all of you. Even the ICSA was kind enough to share its comments, as it always does in all the regulations that we put forth. So we found that there is a need for IFSCA as a regulator to change its approach and look at it as an international jurisdiction. Look at these issues as international. So what we have done is that we have sort of we said that instead of making each incremental change, there will be more footnotes and regulations if we start making those changes. So we said that let us junk the old regulation, let us bring a new regulation, which is fit for purpose, and that is how the new listing regulations came into being. Now, for the success of these regulations, it is important that there is a right ecosystem. Towards this, we are trying to build merchant bankers, and stock exchanges, clearing corporations are already there. So we are trying to build that, and we are trying to build awareness around what exactly these new regulations are. See, let me also tell you one thing. These regulations don't just cover equity, they cover debt also. And debt has already been a success. We already have got almost 160 issues of debt. Almost $60 billion has already been raised from this place by a lot of big Indian companies. In fact, last week we had an issue by REC of almost $500 billion, such a huge issue. And very interestingly, this place also has had a success as far as green, social, sustainable, and sustainability linked bonds are concerned, because almost $14 billion worth of these type of bonds have been raised from this place. And this is exactly because of the fact that we have tried to keep it light touch, and we have also tried to keep it we have tried to adopt international practices. So what Akash will do in the next hour or so is that he's going to run through a presentation. And this presentation is going to give you a lowdown on what are all the things that are contained in the listing regulations. After that, we are going to jointly answer your questions. Mr. Mohan has been kind enough to already share a list of questions. Plus, he has also said that you can send your questions on the chat box. So we'll try to answer your questions. In case we are not able to answer your questions, we will go back and then we will find the answers and we'll get back to you. So over to you, Akash. Please start.
Thank you, sir, for the kind introduction. And thank you for everyone to join this webinar at this point of time. Good afternoon, all. So before going into the IFSCA listing regulations, I'll just run through a brief overview of the GIFT City and GIFT IFSCA and what are the opportunities and the opportunities available in the GIFT IFSCA from professional point of view. So GIFT City, we have a dual structure. One is the domestic tariff area, where many of the IT and finance companies are located, and one is a multi-service special economic zone, where under which the GIFT IFSCA comes into the picture. This is the India's first international financial services center. The vision of the GIFT IFSCA from our Honorable Prime Minister was that we want to make GIFT City the global now center for new age global financial and technology services. GIFT IFSCA is a cutting edge zone for all the infrastructure businesses, and digital infrastructure provides a platform that enables business to increase efficiency. Gift City is an important gateway to connect India with global opportunities. To understand IFSCA as a structure, the GIFT IFSCA has been in operation since 2015. So during that point of time, many of the business activities relating to capital markets are being governed by SEBI. For banking related activities, it is being governed by RBI. So Government of India has decided that to establish a unified regulator so that all these activities can be come under single regulator, and that will enable the ease of doing business. The Government of India established IFSCA as a unified financial regulator under the IFSCA Act 2019. IFSC is mandated to develop and regulate financial institutions, financial services, and financial products within IFSCs in India. The IFSC is the only regulator to have a mandate to not only regulate the financial institutions, services, and products, and also to develop them. The IFSCA is vested with combined powers of 4 domestic regulators, namely RBI, SEBI, IRDA, PFRDA, and under all the 16 central statutes. They have been given powers to the IFSCA under the IFSCA Act. Before going ahead, we can understand the jurisdictional comparison of what IFSC is all about and what the India jurisdiction about. For example, for the rest of the world, FEMA, we are considered as a offshore non-resident. And here, the business is not done in INR. Rather than Government of India has allowed 15 currencies to enable the businesses here. And the residents and the business entities here enjoy the tax holiday. And from every other perspective, it is deemed as an Indian jurisdiction. From the business perspective, it is deemed as the offshore non-resident under the FEMA. The unique, the distinct features that GIFT IFSC enjoys are: it is a dedicated and unified financial regulator. Here it is, the currencies are fully convertible with 15 foreign currencies. Of course, INR is not permitted. And we have an attractive tax regime. We have full-fledged financial ecosystem with global connects. We have best-in-class regulations. All our regulations are internationally aligned. We have sovereign support, including special carve-outs from the domestic laws. Some of the competitive advantages that GIFT IFSC enjoys in comparison to other global jurisdictions or global financial hubs is we have access to large interland Indian economy. We have beneficial cost of operations, and we have available to huge skilled talent pool. From the regulatory perspective, we have benchmarked around 30 regulations as on date. All of our regulations are internationally benchmarked. The listing regulations 2024, market infrastructure institution regulations 2021, fund management regulations 2022, and capital market intermediate regulations 2021. These are related to the capital market activities. Some of the business highlights the GIFT IFSC enjoys is that till now we have 680 plus IFSC registered entities, and the banking has done 101 billion monthly turnover in the international stock exchanges. We have total banking assets of 65 plus billions. Our alternative investment funds is a huge success. We have 155 funds registered till date, and the cumulative debt listing in IFSC is around 60 billion. And the cumulative banking transactions has been around 9.44 billion till August 2024. And some additionally, the ship leasing and airplane leasing has been taken up in the GIFT City. We have 86 aviation leased on GIFT IFSC till date, and total corpus of alternate investment funds till date is around 40 billion, and cumulative derivative transactions booked by banks till August 2024 are around $945 billion.
Yeah, so you actually can see these slides which Akash has shown you. You will be able to sort of fathom the fact that growth is happening in all verticals in the IFSC. So we are an integrated regulator, as Akash said earlier, and we handle the regulations which are handled by different regulators in the Indian jurisdiction. In the IFSC jurisdiction, it is handled by a single regulator. So you can see growth in banking verticals, securities market, bullion, aircraft, shipping, leasing, ship leasing, and even universities. We even have foreign universities in this place which are offering courses.
Some of the key entities, GIFT IFSC and GIFT City, that have been taking place in the banking, we have all the major international and domestic banks. And the fund industries, recently, IDEA set up their own fund entity here. And we have Morgan Stanley and all the major funds. And then for the service providers, we have the Big Four, as well as CAMS. Vistra and all. Other entities were like Bank of America, which has a GCC office here, and Wipro is recently setting up its office. We have aircraft and shipping leasing from the Reliance, and also the one of the biggest steel manufacturer, ArcelorMittal, also has their own fund management office here. In the domestic tariff area, we have all the major IT companies, IBM, Google, Capgemini, TCS, have their own offices. GIFT IFSC, the zone enjoys competitive tax regime. The government of India has provided the tax holiday on business income for 10 out of 15 years, a block of 10 years out of 15 financial years. And we have a minimal alternative tax around 9%. And there's no STT, CTT, GST, or stamp duty on the securities being traded in the international exchanges in IFSC. I have a reduced withholding tax of 9% interest paid on debt instruments. And the funds enjoy a competitive tax regime. And some of the incentives were given by the Gujarat IT and ITS policy. So coming to the IFSC business verticals, in the banking sector, as I said earlier, the banking services that are currently being taken in IFSC are wholesale banking, corporate banking, retail banking, trade finance, ECBs, ODI, acquisition finance, treasury center, merchant banking activities. Currently, we have around 28 banks. Major foreign banks and almost all Indian banks have their branches here. In the funds industry, funds ecosystem, we have the committed fund targeted corpus of $38 billion. All the major fund activities have been taken, already are in upward trajectory here. And you see the major AFs and fund portfolio managers that are already registered in the IFSC. Coming to the capital market ecosystem in IFSC, we have the two operational international exchanges. One is India NX, which is a subsidiary of BSE India, and NSE International Exchange, which is a subsidiary of NSE India. We also have two clearing corporations, India International Clearing Corporation, NSE Clearing Corporation, and we have an international depository, which is India International Depository. Along with that, we have around more than 125 capital market intermediaries, including credit rating agencies, which has recently opened the shop. The products that are available IFSC exchanges are equity index derivatives, currency derivatives, commodity derivatives, depositories, and corporate bonds. And GIFT Nifty is one of our success stories in this range. In the international exchanges, we have NSE IFSC receipts, which are normally US stocks, which are traded as UDRs. And we also have global access through India NX portal. Via global access, you can access many international exchanges, and they will be listed at ETFs and international stocks. Coming to the direct listing part. As Pradeep sir said earlier, last year, July 20th, Honorable Finance Minister has announced that the government has taken a decision to enable direct listing of listed and unlisted companies on IFSC exchanges, which will be operational shortly, enabling startups and companies of like nature to access global markets to GIFT IFSC. This will also facilitate access to global capital and result in better valuation for Indian companies. Following which, IFSC has formed a working group, direct listing working group, and has come up with a working group report in the month of December 2023. In January 2024, Government of India has notified the direct listing scheme, following which IFSC has formed a primary markets standing committee, which was headed by Shri Mohandas Pai. After that, we have gone to IFSC has a unique feature that every 3 years we review our regulations. So while reviewing our previous listing and issuance regulations of IFSCA, we have, as Pradeep sir said earlier, that we have gone through so many amendments have been received and so many comments have been received. Rather than going each and every amendment, we thought we'll come up with a fresh new listing regulations by benchmarking with the other global jurisdictions. While preparing this regulation, we have benchmarked with London, NASDAQ, US SEC, Singapore, Hong Kong. The direct listing, the regulatory framework is the direct listing scheme under FMND Amendment Rules 2024 and companies LEAP rules, listing of equity shares and permissible jurisdiction rules. And Government of India has also released FAQs on the direct listing scheme.
So on the LEAP rules, we are still in discussion with the MCA to make a few more changes to the rules, which will sort of counter listing on this in this jurisdiction. So that's something which we are in dialogue with MCA, and that should also happen soon.
Coming to the direct listing, the concept of direct listing is different from global jurisdiction. As in direct listing here, you can offer new shares as well as the offer for shares for the public Indian companies, both unlisted and listed. The permissible holder for direct listing scheme here is that NRS, FPS, eligible foreign investors and other non-residents. Provided such holder who is a citizen of country which shares land border with India or an entity in such a country or an entity whose beneficial owner is from such country, such hold shares, equity shares of public Indian companies only within the approval of central government. These primarily comes from the press note 3 issued by the DPIIT during COVID 2020. For the foreign investment limits, foreign holdings shall not exceed limits prescribed under the Schedule 1 of the NDA rules. They are subject to limits specified for foreign portfolio investments under these rules. For unlisted public companies, issue price for listing of equity shares shall be determined by book building process and shall not be less than the fair market value. Subsequent issuance and transfer of equity shares for the purpose of additional listing shall be as per applicable pricing norms of the international exchange and the permissible jurisdiction.
So essentially, just like the domestic jurisdiction, pricing is also free as per between the issuer and the investor.
While preparing the IFSCA listing regulations, some of the key considerations which are done is, like I earlier said, apart from global best practices, we also followed the IFSCA principles and keeping in mind of ease of doing business and also consulting with both Indian and foreign issuers. The IFSCA listing regulations is broadly cover IPOs and FPOs, SPACs, secondary listing, depository receipts, debt securities, and we also come up with additionally other financial products like commercial papers, certificates of deposits. The IFSCA listing regulations, the eligibility criteria is revenue test of USD 20 million in last financial year or average over last 3 financial years. Profit test, pre-tax profit of $1 million in the last financial year or average over last 3 years. And the post-market capitalization of USD 25 million. These are very liberal in nature and these are globally benchmarked. When it comes to filing of offer document, issuer required to file offer document to IFSCA for observations. Issue size less than 50 million. They are exempted from filing an offer document with the authority.
Yeah. And there are two common misconceptions which I would like to sort of clear here. One is that you need not be incorporated in the IFSC to launch an issue. So this is one question which I keep receiving in many fora that I have attended. So there is no need for you to be incorporated here physically. You can be in India or you can be abroad and you can launch an issue. Secondly, if you, like Akash said, if you look at the slide once again, all these things are or, okay, which means that even if you are a company that is running on losses, you can still come. So it's not a revenue test or a profit test or alternative criterion, which we have sort of mentioned.
The disclosure in the offer document shall contain all material disclosures which are true, correct, and adequate to enable the investors to take an informed investment decision. Financial information of the issuer shall not be older than 135 days. Accounting standards, we have asked for the IFRS or US GAAP or Ind AS or any other accounting standards as applicable in the jurisdiction of the incorporation. In case an issuer is preparing financial statements as per the accounting standards of its home jurisdiction, they are required to reconcile the same with IFRS standards. When it comes to disclosures, the offer document, summary, risk factors, introduction of the offer, general information, capital structures, particulars of the issue, underwriting, tax implication for the investors, about the issuers, financial statements, material related party transactions, legal and other information, details of other major group companies, and regulatory and other disclosures. The offer timing within a period of not more than 12 months from the date of issuance of observation by IFSCA. For offer period, IPO shall be kept open for at least 1 working day, not more than 10 working days. Pricing, the issuer shall determine the pricing via fixed price mechanism or through book building process, and it has to be disclosed on the offer document. In case of listing of equity shares of public Indian company, the issuer shall also comply with the requirements prescribed under the Schedule 11 of the Foreign Exchange Management NDA Rules 2019. When it comes to the minimum public offer, for Indian companies, they're as per the Securities Contract Regulations Rules, SCRA 1957. When it comes to foreign companies, the minimum public offer as well as minimum public shareholding of 10% of the post-issue capital. Underwriters, the issuer are open to allowed to have an underwriter, and adequate disclosures have to be made when underwriting arrangement have been made in the offer document. When it comes to anchor investor, issuer may offer a portion of the issue shares for subscription by anchor investor subject to issuer disclosure in the offer document.
So actually in this minimum public offer, there is something which I would like to add. In India, the minimum public offer is 25%. In case you do a 10% thing, you need to do it staggeredly, right? So it says that you need to achieve it within 3 years. So and there are also 3 different slabs for you to achieve it. So we had discussed with the SCOP. We had also discussed internationally with a few companies also and Indian companies, and we also studied certain global practices. Now, if you take the NYC has something like what you call as a dilution in the terms of number of shares and maybe even in terms of amount and other things. Post-issue capital. So when you look at India, India has a 25% cap. So we thought that 25% may be a very high percentage of dilution when it comes to an IFSC. So we thought we should probably sort of reduce it to 10%. So this was after receiving comments. So even though the listing regulations were approved by the authority in June, so we had to get the thing drafted rightly in the SCRR. So if you look at the SCRR, the last amendment that has been made, that was last month, and that was on the minimum public holding, and it allows only companies in the IFSC. This dispensation is special and it is given only to companies in the IFSC. It says that in case you are in the IFSC, you launch a public issue, then your dilution needs to be only 10%.
The monitoring agency issuer may choose to appoint a credit rating agency as a monitoring agency for monitoring the use of proceeds of the issue. For lock-up period, pre-issue shareholding of the promoters and controlling shareholders of the issuer shall be locked up for a period of 180 days. Here, in place of promoters of the group companies, we have come up with the concept of controlling shareholders.
Yeah, okay, that's also a good point. So I just wanted to throw some light on it. So if you look again, a lot of international offer documents, either there are people who have started the company and they have sort of left it, they have sort of already sold to other people and they have left. So the concept of a promoter is a very indigenous term to India and maybe a few Asian countries, but largely the term promoter is not used in terms of lock-in and other reasons. So they may use the generic term saying that a person is promoted a company. So whereas in India, it has a huge implication. In fact, SEBI has a separate rule under 31A of the LODR for reclassification of promoters, and at no time it can go below 10%. So, but if you look internationally, the concept of a controlling shareholder is there, and the reason why a concept of a controlling shareholder has been sort of enunciated is that now, when it comes to shareholder democracy, it is important to distinguish between controlling and non-controlling shareholders, so that the interest of minority and also in the interest of shareholder democracy, controlling shareholders do not sort of take over the discussions or get get their proposals vetoed when it comes to shareholder resolutions. So the concept of controlling shareholder has been introduced for the first time. And I think it's the first time, though SEBI did a consultation on promoters and controlling shareholders, it was not brought into law. So it's the first time, an Indian regulator has brought in the concept of a controlling shareholder, and we have fixed it at 10%, right? So if you hold up to 10%, you are called as a controlling shareholder. And in India, just to add one more point, when it comes to lock-in, so you have 2 types of lock-in, and we are using the term lock-up. That is although it may connote something else in the criminal and police parlance. So we don't mean that. So this is the term that is internationally used in all documents. So we adopted that. So in India, the lock-in requirements are a little stringent for the promoters, and you have 3 years lock-in. Whereas in case of pre-issue shareholders, we have said that you need to lock in for 1 full year. Whereas here, promoters, controlling share, there is no concept of a pre-issue shareholder in terms of lock-in. And this is going to be applicable only to a promoter or a controlling shareholder, and that too only for a period of 6 months.
So what are the advantages that issuer enjoys for coming for direct listing at the GIFT IFS is that the issuer can have an expanded investor base and better valuation. They can have diversification, financial flexibility of diversification in terms of acquiring capital, and they have the financial flexibility because it is being raised in the dollars. They can enjoy the global visibility. If they're planning to expand in other countries by raising capital here, they can do that. And also for the VC and PE funds and all, they can have an exit opportunity here.
One other thing I would like to add to what Akash has said is that one of the important aspects which an issuer or a company will consider when it comes to capital is the cost of capital. So that is something which is very cheap here when compared to international jurisdictions like maybe raising capital in London or maybe Hong Kong or Singapore.
So previously we discussed what are the benefits for the issuers. Now coming to what are the benefits that investors will enjoy. There the trading and investing is being done in the foreign currency, preferably in the US dollars. And we have the international exchanges here operate for 20 plus hours. And the securities that are being traded on the international exchange and IFSC, they enjoy the tax benefits like no capital gains tax, no STT and no GST. When it comes to listing of the foreign companies, if there are three things here. If a foreign company or an IFSC company is being listed in GIFT IFSC, then retail Indian investors can participate via LRS, and even the domestic mutual funds can participate. If the Indian company is being listed here, then the retail Indian investors cannot participate, but NRS, all the global investors and global fund institutions can participate.
So I think this is a very important point that Akash has said, and this actually connotes this comes out as a point of as a principle. So we at IFSC are not here to compete with SEBI, for example, or the domestic jurisdiction. We are supposed to be complementary to the domestic jurisdiction. So it's essentially creating capital. So that is the reason why the Indian investors have, in case an Indian company wants to launch an issue in India, so then Indian investors can participate. Whereas in case they want to launch here, we expect foreign investors to participate. However, Indian investors are given an opportunity to invest in foreign companies. So that is a very big advantage to them. They can do it through the LRS.
The estimate says that more than 50% of the Indian unicorn startups are currently domiciled in offshore jurisdictions like US, Singapore, and United Kingdom. And some of the most popular examples of countries to which Indian entities have flipped. So it is an opportunity for those companies to come and list here because even retail Indians can participate apart from the global investors.
In fact, one of the things which I would also like to add here is a small nugget of information, is that the interest which has been shown so far by promoters are those who are headquartered in various international jurisdictions, like Singapore, US, for example. We have already received proposals. We hope mostly by December we should have the first few listings on the IFSC.
From the listing regulations, the listing obligations and disclosure requirements are largely based on shareholder pattern, financial statements, material or price sensitive event information, board meetings, annual extraordinary general meetings, change in directors, key managerial personnels, and compliance officer, resignation of auditors, adverse opinions by auditors, details of encumbrances, annual report, sustainability reporting, and whistleblower mechanism.
So let me just add one more point to what Akash has mentioned here. Now, when you see we showed the initial disclosures also, right?
Yes.
Yeah, when you see the initial disclosures and continuous disclosures, if you see, now these things are how it appears. If you see this, the last paragraph, as well as if you go to the continuous disclosures, this is how it appears in the regulations also. So there are no granular requirements under these. So if you look at the domestic jurisdiction for various reasons and for right reasons, SEBI has prescribed granular information on what constitutes material information, what constitutes a related party transaction, etc. Whereas here it is again left, it is very broad, it's left to the investor and the investee. So disclosures which are made under these will be according to a contract between you and the investor. In case you have left out anything, then that is something which action may be taken, or maybe that is the investors may have an issue with you, will have grouse with you, obviously. But we have the onus is on the issuer to ensure that disclosures are made under these heads. So the heads are left very broad as far as we have as far as IFSCA is concerned. But there are two things that while we are here to ensure that there are regulations are fit for purpose, we should also not lose sight of the fact that there is need for credibility of this jurisdiction, right? So that is why issues like stewardship code, corporate governance, sustainability reporting are not given a go by. So we have ensured that you need to have a whistleblower mechanism. You need to have sustainability reporting in case your net worth is more than 50 million, if I'm not wrong. You need to have sustainability reporting. So these are things which are important, and we also are coming with a broad, a framework on corporate governance, which is largely based on the Companies Act, so that there is no additional imposition of requirement on an Indian company.
to add to what Pradeep sir said, these disclosures are based majorly on the principal basis. I mean, we welcome the issuers to even disclose more than what is required. It is based on the relations, what the kind of relationship they want to maintain with the investors. I'll just briefly explain the listing checklist. As such, we have gone through the requirements. Is a gist of all the listing checklist: the appointment of lead manager and compliance officer, file application with the recognized stock exchange for seeking in principle approval. The lead manager then submit the draft offer document along with the due diligence certificate. The draft offer document shall be hosted on the website of the authority, recognized stock exchanges, and the issuer and the lead manager. The authority may issue observations, if any, within 21 working days, which shall be incorporated in the offer document. The issuer, in consultation with the lead manager, will determine the pricing through either a fixed price or a book building process. The IPO shall be open for 1 to 10 working days. The issuer through lead manager shall file a post-issue report with the recognized stock exchanges within 10 working days from the date of closing of the issue. The issuer shall make the offer within 12 months from the date of the issuance of observation by the authority.
So again, staying on the slide, if you see a lot of these things are very different in nature when compared to the domestic jurisdiction. So we will be offering observations only if the size is more than $50 million. So otherwise we can file and fly, not an issue. And if you see, you can even keep an IPO open for 1 day. One other important issue, thing of note, is that there is no compulsion on you to sort of offer it to 1,000 shareholders, which is there in the domestic jurisdiction. Whereas here you can even offer it to one underwriter, one investor, and go ahead. Then they can do a downselling also. That is also something that is of interest. That should be of interest to issuers and compliance officers alike. And other things I think are general. So a post-issue report or or filing the observation validity is 12 months domestically also. So internationally also we thought maybe we'll make it 18 months, but then we had comments which said that don't make it old because it becomes old by that time. So we said we thought we'll stick to 12 months.
So coming to the debt securities, after the fund management activities, debt security is something that has picked up activities within IFSC. Currently, our focus is on direct listing. So when it comes to debt listing, the ease of raising funds by all type of issuers, alignment of listing framework versus global exchanges. We are transparent and simplified listing process. Cost is very competitive for fees and services. Settlement of securities is through international CSDs. When it comes to ESG labeled bonds, the framework for ESG labeled bond, we are allowed for GSS plus, that is green bonds, social bonds, sustainable bonds, and sustainability linked bonds. If you want to list any of your bonds under ESG category, then the listing regulation also allowed for the recognized framework from international capital market, ICMA principles or guidelines, climate bond standards, ASEAN standards, and European Union standards. And in the future, if any globally accepted frameworks come into picture, then the authority will take decision from time to time.
Yeah. So I request Akash to remain on the slide for a minute, and I want to explain something. So now I had the fortune and privilege of drafting the local green bond framework for domestic India. It actually derives the best of the ICMA principles and also provides for green bonds, blue bonds, and transition bonds. We also had a framework for greenwashing as well as transition bonds. But now that technically becomes like an unofficial taxonomy. In fact, official taxonomy, though the government has now said that it's going to come with the taxonomy, the sovereign green bonds which have been issued by the Reserve Bank of India on the government of India's behalf they follow the ICMA taxonomy. So the SEBI definition of green bond also follows largely the ICMA taxonomy. Now, initially, of course, if you see this, the reason why we have said that this is an international jurisdiction. Now, an international jurisdiction means that if you have a taxonomy of your own, now what happens is what is green for you may not be green for someone else. What is ESG for you may not be ESG for someone else. So there is a need for you to ensure to sort of say that there will be investors in various jurisdictions, issuers in various jurisdictions. So having a one-size-fits-all taxonomy is like it's a bottomless glass. No? It's a never-ending game. You can't sort of draft that. So what we have done is that we have taken the best of the world principles. We have said that, okay, there are different taxonomies which are accepted, recognized, the ISSB, the ICMA, CBI, ASEAN, European. So suppose there is an issuer from Europe, then that person would probably want an European standards to be sort of maintained. A person from Japan would say that I'm comfortable with an ASEAN standard. So reinventing everything and putting them here may not be the right idea. For example, if you have So Indian taxonomies are also recognized. So it's important for us to ensure that we provide the pipe between the investor and the investee by saying that do what is comfortable to each of you. So this has actually helped. I think we have the slide on the number of amount raised. If you see this has actually seen an amount of almost $14 billion that has been raised so far here. And this is not only green. We have social bonds, sustainable bonds, sustainability linked bonds. In fact, sustainability linked bonds internationally are the ones which do not get much subscription. In fact, they are the least subscribed to models. But we have been able to do it just because of the fact that we have said that the international frameworks are available and it is a contract between the investor and the investee.
And coming to ESG disclosure obligations, similar to listing equity issuance, similar here you have to come with the pre-issue disclosures and annual disclosures until full allocation has been made. For GSS plus bonds, the ESG objectives of the issue, process of evaluation, selection of the project or assets, proposed utilization of the proceeds, system and procedure to track the deployment have to be part of the pre-issue disclosures. And utilization report, allocation report, and impact report has to be done annual basis till the full allocation of the bond has been completed. And come to sustainability linked bonds, the rationale for issuance consistent with the issuer's overall sustainability strategy. All pre-issuance obligations in accordance with the aligned international standards have to be pre-disclosed. And comes to annual disclosures, the performance of selected KPIs and verification report by external reviewer on performance against SPTs and other related impact has to be done on an annual basis.
Yeah, again, staying on the slide. So if you look at it, as I was saying, though we are a fit for purpose, our regulations are fit for purpose. They are contoured to be international in nature. There is one aspect which we have not let go in any of our regulations, that is credibility, and also the fact that an investor needs to be assured that once his or her money is sort of placed, particularly in a bond, because there is some notion of altruism when it comes to investing in a green bond. Though the concept of greenium has actually taken a walk now internationally and domestically also. The fact remains that if I'm going to invest in a green bond, I would like to get that extra nugget of information as to whether my investment has actually gone for a green purpose or not. So which is why we have sort of mandated that not only initial disclosures, the fact that it has to be reviewed by an external reviewer, independent expert, because these things give rise to greenwashing. Greenwashing is the biggest crime when it comes to green bonds internationally. Either A, the investment objectives are not followed. B, there is also a possibility that they are not used for the purposes which they have been claimed that they will be used. So towards this, it's important that investors get regular granular information. And that is what Akash explained to you when it comes to these types of bonds.
To add to Pradeep sir regarding the total debt listings, we have around 60 billion that has cumulative debt that has been listed currently. Out of the 60 billion that has been around 60% of the issuances are majorly by the domestic financial institutions, especially the banks and NBFCs. And the second category is the largest category is energy sector, which has contributed to nearly 20% of the issuances. And most of these are for the renewable energy purposes. Even when it comes to ESG level bonds, the corporates around 13 billion has been raised. The corporates and PSUs are equally raising. The corporates have raised around 6.5 billion, and the PSUs are contributed to raising around 6.5 billion. Contrast to India, the issuances of ESG is more here. In India, as per the SEBI data, around 1 billion has been issued under the ESG category. Here we have seen around 14 billion has been issued till date. The estimate says that India will require over 10 trillion US dollars to meet its net zero commitment. So raising capital for ESG bonds at GIFT IFSCA is a very prudent decision.
Yeah. So again, I want to add a couple of bits of information here. See, one, if you look at section 166(2) of the Companies Act, it very clearly states that, in fact, none of the other Companies Acts has this. It states that the directors should ensure the company carries on business in a way that it does not affect environment and the society negatively. So they have to take environment and society into account while carrying on business. So which means the only way to carry on business hereafter will be in a sustainable manner. Even for hard to abate sectors, there is a need to ensure that you move towards a green method or green way of doing business, or probably set off what is being sort of emitted, or or either through water or air or whatnot. And that is why when we have made commitments as a nation, when we signed the Paris Accord, that we will attain this whole net zero thing by 2070, and we have got minor goals. For example, the 2030 goals have got certain nationally determined contributions. Now, towards this, how can a country achieve these goals? A country can achieve these goals only when the constituents of the country achieves these goals, right? It's not a separate entity. So these entities, the companies also have to ensure that they do business in a sustainable manner. So for which we need money. Like Akash rightly said, almost $10 trillion is such a huge figure. And how will this money come? This money will come from various sources, including international sources. If you look at even the COP decisions, one of the decisions is to create a fund, and this fund will help smaller companies, smaller countries, or maybe poorer countries. No, as far as India is concerned, India is not a poor country, so we cannot get money from that fund. So it's important for companies to fund their net zero goals, their sustainable way of doing business by through green bonds and sustainable bonds. So, which is why this jurisdiction offers you that facility.
So one of the recent achievements of debt listing is that in the last year concluded G20 in India, the sustainable finance, there is a sustainable finance subgroup within the G20. They have featured couple of bonds that are issued here in their case studies. The one is under Aavas Finances Limited social bond issuance, and one is Shriram Transport Finance Company Limited social bond issuances. They have marked it against the 2030 SDG goals. Like Aavas Finance Limited, it is marked under the SDGs of gender equality, decent work and economic growth, and sustainable cities and communities. And Shriram Transport Finance issuance is marked under the decent work and economic growth and the reduced inequalities of the SDGs.
So internationally, you have this bond called social impact bond or a development impact bond. So here, what happens in these bonds? I mean, I'm not talking about these bonds which are being issued here. No, essentially, the concept of a social bond is that I'm going to borrow money from an investor who wants the betterment of society. So there have been some issues as far as these are concerned internationally, because the development impact bonds, particularly places like South Africa where this actually took off, they found that after a point in time, disclosures were not made to the investors, after which the whole concept of a DIB petered off. So what we are trying to do here is that even in case of social bonds, to ensure the credibility of the issue, both pre-issue and post-issue disclosures have to be made to the investors.
Additionally, in the new listing regulations, we also come up with the issuances of other financial products, including commercial papers and certificates of deposit. And once the listing regulations are issued, there is no framework existing for the commercial papers and certificates of deposit. So we have come with a consultation paper proposing the framework for commercial papers and certificates of deposit. The proposed framework for commercial papers is issuer meeting the eligibility criteria provided in the listing regulations except Indian issuers. Conditions, the deposit, it has to be in the demat form and has to be with the recognized depository in the IFSCA on the international central securities deposits, the ISDs. The maturity is not less than 7 days and not more than 1 year. Currency is specified foreign currency. Eligible investors, the issuer may issue a CP to a person resident in India or to a person resident outside India, subject to FEMA regulations. Initial disclosures, initial issuer disclosure, issuer related disclosures, and continuous disclosures being the audited final statements, materials, price sensitive information, details of defaults or delays, revision, and any revision in the credit rating. And in CP is also allowed for buyback. The buyback of CP in full or part at prevailing market prices, and offer has to be made to all existing investors. And buyback offer may not be made before 30 days from the date of issuance.
So this is a new reform that we brought very recently last month. And after the approval of the board, our authority, we had brought this, and this helps companies to use the IFSC jurisdiction for short-term borrowings. So, and if you see mutual funds, a lot of funds are in fact large investors as far as commercial paper are concerned. Companies, they buy as far as they issue commercial paper because they need money for short-term objects like working capital, etc. So CP issuance is actually quite big internationally as well as in India. So one of the things we have also mentioned, it's a choice for rating, and like a bond where rating is compulsory that we have brought in recently. CP the option, it's an option for you to rate.
Coming to the certificates of deposit, the proposed framework is the IFSC banking units, the banks which are set up within the IFSC, we call it as IFSC banking units. Only they are eligible to issue the certificates of deposit. And the condition is being that they have to be held in DMAT form, and they can be held with the recognized depository within IFSC or in any other ICSD. Initial disclosure being the issuer disclosure, issuer related disclosures. Continuing disclosure meaning the any data such as expected default, delay, default in timely fulfillment of its payment obligations, or any material event development action that may adversely affect the fulfillment of its payment obligation has to be made.
Yeah. So fine then. So we have finished our presentation. So what I'm going to do is that first I'm going to try to answer the questions. I think I've sent you also on WhatsApp. So which Mohanji has sent to us on WhatsApp. So and then we will try to take up other questions as they come along. So the first question that has been asked is what support services and infrastructure is available in the GIFT City for companies, including depositories, brokers, etc. Very good question. First is like Akash showed you, we have two functioning stock exchanges. We have a functioning clearing corporation. We have a functioning depository. And we also already have some brokers who are here. There is no compulsion for you to have an RTI. There is a choice for the merchant banker, unlike in the domestic jurisdiction. 5 merchant bankers are already registered. We are also trying to come up with a framework whereby the entire universe of merchant bankers in India will in some way be able to sort of participate in this. So that will actually open the whole ecosystem here. So that is something also which we are trying to do. So so that way, I think all these support services are already available, and which is why almost 4 issuers have already contacted us within just 1 month of publishing the regulations and to money from this jurisdiction. Okay, and I go to the second question. Can resident individuals also purchase in shares? Will LRS be applicable? I think Akash addressed this question. Just to repeat, Indian companies, Indians cannot invest. Foreign companies, Indians can invest. With the listing regulations now in place, what other regulatory frameworks like insider trading, SAST, etc., can be expected? Very good question. We are working on a similar fit for purpose type of regulation for SAST, insider trading. And this is a very good question because you need to have everything together. So we will be placing it before our standing committee on primary markets. After that, we'll issue it. And I can once again assure you that these regulations are again contour to this jurisdiction. So they will not be they will not be granular as it's there in the domestic jurisdiction. There is the next question is general timeline and costs involved. Costs, it will be difficult for me to comment. In fact, costs, it's very difficult to comment even in the domestic jurisdiction. But timelines are, unless it is above $50 million, you can just file and file. There is no point. There is no comment that is needed from our side. In case it's above $50 million, then we will take 21 days or 30, 21 days, working days to give our comment. So apart from that, I think the whole process should get over within a period of a couple of months.
To add to Pradeep, sir, our listing fees are very minimal when it comes to other global jurisdictions.
Very, very minimal. So that is also, that's a good point. Yes. The next question is, what measures are IFSCA and exchanges and GIFT City taking to enhance market liquidity and attract more investors? Very, very good question. Now, in case of liquidity is a question, is a chicken and egg situation, right? So we are a very, very new jurisdiction. We have just started, which is so liquidity initially, there will be some time, it will take some time. And it all depends on how attractive the product is, right? So if suppose it's a big company, it's a company in which people are very much interested, then obviously it will sell like hotcakes, and there will be people who will be buying and selling. But otherwise, I think it will take some time. But I believe that once issues get listed, I think once people have shares to sell, there will be people who want shares to buy. So that will certainly take off. So that is something. But I'm just trying to answer this question a little more as far as bonds are concerned. Now it comes to bonds. It's a different market, a different ball game altogether, because bonds largely are hold to maturity instruments. And presently, even though almost 150 issues of bonds have been launched here, largely there has been no trading because they're all been held to maturity by investors, all these international investors. But we are anyway working with the stock exchanges and coming out with further reforms like repo, right? So then the repo helps you to sort of pledge your bonds and sort of take money. We are trying to also bring in the concept of market making and other things. So those things will enhance liquidity for bonds in the secondary market. So that should also happen. The next
Fine.
question is, yeah, you have one more. Yeah. How does IFSCA listing process compare with international markets?
Fine. What measures are
That I just spoke now, no, on liquidity. Yeah. So the last one is on how do we compare? So if you ask us, obviously we'll say that we are the best. But if you do an unbiased comparison, you will come up and say that we are the best. So that is something which I can tell you because we have had the benefit of looking at others, right? So if you are the first mover, then there is a possibility that you may do something big, something small. There may be an overreach or there may be an underreach. But as far as we are concerned, we have had the benefit of, thankfully, many of the people who have worked there have also been in SEBI, who have also seen the domestic jurisdiction, handled offer documents. And so we need to know what are the issues that we may have to avoid, or maybe we have to counter it specifically. Avoid in the sense, counter it specifically for its jurisdiction. So what we have done is that we have done a 360-degree feedback. We have taken comments of market participants, issuers, the market infrastructure institutions and international investors. We received comments from a lot of lawyers also who have handled international offer documents. And we ourselves looked into international offer documents. So which is why if you look at the listing regulations, if you have a very unbiased view, if you compare it, you will certainly say that we stand very much in competition. It is as good, if not better than international jurisdictions. So if there are any other questions, we'll be happy to answer.
Yeah, thank you very much, Mr. Pradeep and Mr. Akash. It was a very, very crisp as well as effective presentation. There are many more questions I'll go through. I mean,
yeah, sure.
Maybe some of them could be basic. Kindly you can pardon because the area being a new one.
Not an issue.
Yeah. So, I mean, a question from a member is whether dual listing whether a company can list in IFSC as well as a BSE or NSE.
Yeah, very good question again. So as far as this is concerned, we are working with SEBI, but for these companies, the requirements will be as much as what SEBI requires you to do, because SEBI requirements are far, far granular and a lot more heavy when it compares to IFSC jurisdiction companies. However, we are working with SEBI, so that should come out very soon.
Okay. Whether we have to seek registered office services if direct listing is happening in IFSC.
So I clarified this again, and I will do this answer. I feel the need to clarify it again because I think a lot of people have this question. There is no need for you to be incorporated in the GIFT City to raise money here. You can stay where you are.
Yes. Okay. Another question: the word KMP covers company secretary, which is applicable to Indian company. What will be the status of KMP for foreign company? Whether foreign company which wants to come for listing at IFSCA needs to appoint CS compulsorily.
So I think we have
in the listing regulations we have considered while doing that we have mentioned company secretary or equivalent position which the foreign jurisdictions will be having. In the regulations we have mentioned that part.
Okay, if an Indian company is going for funds, then the company secretary will be mandatorily required.
Yeah. Indian company we should, and I'm sure you will also agree, sir.
Okay. Yeah. Can an existing Indian company qualifying norms of turnover and having existing FDI can raise funds from the same foreign investors through the route of direct listing in IFSC? This will give them a benefit of no capital gains.
No, capital. I don't know about capital gains. I don't think so. But you can do that. Essentially, but the issue will be open to everyone. People who are open to subscribe, they can subscribe. If the same foreign investors want to subscribe, they can subscribe.
Okay. Another question is, earlier there was a requirement of mandatory listing of debt securities. Under the new regulation, this requirement has been removed. Does this mean that a finance company cannot issue unlisted debenture subject to compliances under Companies Act?
No, as I understand, we have never mandated listing. The mandatory listing was brought in SEBI, where we had said that in case you are a listed entity, in case you issue further debt, it has to be listed only. We don't have a concept of compulsory listing.
Okay. under listing criteria, whether net worth, profit, and 3 years of incorporation are compulsory criteria, or it can be waived off by the regulators on case-to-case basis.
I think that is, and it is again. I think Akash also showed it. It is all or.
And at the same
Yeah.
time, they are very minimal.
Very, very minimal. So highly, we will not be waiving those. That will be because
Okay.
waiver or exemption from any regulation is based on a few factors. One of the main factors, which is that impossibility of compliance is one thing. Second, technicality of compliance. Third is in case it's going to cause, it is going to benefit the investors. So these things are generally considered by the regulator in giving a waiver. So I don't think this request will fall in any of these.
And also, these are based on the market feedback as well while we are preparing the regulations.
Okay. Can a newly incorporated Indian company list its shares in GIFT IFSC?
Yes. Which is why we have said the third criterion, which says that you need to have only a market capitalization. You need not have a revenue or a profit criteria will apply. So you can directly list, no problem.
Another question is, the tax benefits are only for non-residents, someone is asking.
Tax benefits are for non-residents.
Capital
gains.
Yeah, for residents, the normal
Indian
IT
law will apply. Yes, for residents, obviously Indian laws will apply.
Is there anything relating to underwriters, whether and also whether minimum public shareholding should not go below 25%, whether such regulations are there?
The issuer is free to have an underwriter or not to have an underwriter. If he has an underwriter, he has to disclose in the offer document that we're having underwriter, and he also has to disclose the agreement between him and the underwriter in the offer document.
Yeah, and for as far as minimum public shareholding, I think I had clarified it earlier. It is only 10%.
Okay. With regard to jurisdiction, sir, you stated that GIFT is a residential jurisdiction. With regard to legal regulations for overseas market, can you elaborate on this?
Yeah, okay. So let me try to answer this, and I request Akash to chip in. So we are a jurisdiction which is international in nature for the purpose of FEMA. So FEMA does not apply to this jurisdiction. However, all other regulations like Income Tax Act, Companies Act, and those things will actually apply to this jurisdiction. But if you are a foreign company, then obviously the rules of your that particular nation will apply to you, and the IFSCA regulations will apply to you. So Indian regulations will not apply to you. Not to add anything to that.
For all practical purposes, this jurisdiction is treated as is out of the body of FEMA.
Yeah.
They're asking IFSC is for domestic Indian companies to raise funds only from foreign investors, or Indian investors can also participate.
So Indian investors can participate in bond issues, but not in equity issues. Indian investors can participate in equity issues of foreign companies.
Okay. Credit rating agencies in IFSC, it be regulated by SEBI or RBI or IFSCA?
IFSCA only. In fact, the first credit rating agency just started operations last week. CAR Edge Global has started, and in case you are a credit rating agency here, you can do international, global ratings and sovereign ratings. You can't do ratings in India.
Okay. Can a private unlisted company list its shares outside the country?
No, you have to be, if you are an Indian company, you have to be a public company because you are bound by the Companies Act. So internationally, there is no such rule. So any type of company can list. We don't have an issue as far as that is concerned. But as far as Indian company is concerned, the law requires you to be a public company.
General question, one of the members is asking, what is the key focus of the regulator IFSC?
Yeah, good. So the focus, I'll give you a tagline in a nutshell. A tagline for us is offshore, onshore, offshore the onshore, right? Onshore the offshore. Onshore the offshore. So onshore means you bring it to India, what is there abroad. So, so essentially, if you see, one of the things that has always been told about India is that India's population is a problem, right? But after a point of time, we actually recognize the fact that our population actually pays demographic dividend. 1 in every 6 people on the planet is an Indian. So this has ensured discovered that many Indians, after a point in time, have actually left the country. They have formed companies abroad. They've actually either they have settled abroad, or maybe they have even sort of become citizens of those countries. Now, what has happened is that over a period of time, these people have either they want to come back to India or they want to at least still tap into the India story, because today India, with almost being the fifth largest as far as the GDP is concerned and galloping towards the third largest economy in the world, it is a place. It's a country in which every country wants to have a piece. As we speak today, the FTSE has actually included Indian sovereign bonds in the index. Right. Very recently, we had the Morgan Stanley index also including these things were not possible maybe like a few years ago. Now, this means that the India story is something which everyone wants to have a piece. So the idea of this jurisdiction is to make all those people come back, make all those people take a part of the India story. So in case I, as an Indian, want to invest in a company that is incorporated in Singapore, which is started by an Indian, for example, it can be even be a foreign player, but Indian. So that is the second part of my answer. The first part was like that. So then let these people also be part of that story. So then that is one of the reasons why it is established. Secondly, a larger issue is that, see, when we became the presidents, we got the presidency of the G20. One of the things that we have said is that wealth, and what is the tagline for India? We have said that wealth should be for all. We have said that Vasudhaiva Kudumbakam is the slogan which we will follow. The world is a family. Whenever there is an international calamity, India is the first country to help. Right? Recently also, despite whatever Maldives did to us, we were the country to help them as far as their loan is concerned. When it came to COVID, we were the first people to sell vaccines. So we want to extend that also to here. It's important. So what we did when we took over the G20 presidency is that we wanted the African Union also to be part of the fold. So we want to be a leader of the global South. So towards that, we need an international jurisdiction, a finance center, so which caters to people maybe to whom the other financial centers don't cater to because of various reasons. So we want to cater to them also. So this is the second purpose for which it has been formed. So essentially, we want to ensure that this is a place which can be used to raise finance, to sell finance, and maybe other financial products also.
They are asking whether existing share of Indian company be rupee denominated or foreign currency denominated.
So here everything be a foreign currency denominated only.
Okay. Almost another question, slightly differently. They're asking if any Indian listed company outside the GIFT city, do they require to open a separate entity in IFSCA, or they should have a branch offices in before?
Once again, you need not be present in the GIFT city to make use of these regulations. You can be in India, you can be abroad.
Another question, similar to SME exchange migrations, are there any thresholds or agreements for migrations to other stock exchanges like BSE, NSE once the companies mature?
No. So we don't have the concept of SME here. Earlier regulations carried the concept of SME, but now we don't have the concept of SME. So in case you want to raise anything above 25 million or 50 million, 25 million. 25 million is the minimum capitalization, which anyway is very low. It's just around 200 crores. So we found that internationally, most of the issues are not less than that. So anyone above 200 crore, you can come here and list.
Here we don't have the concept of SME board and main board. Yeah. Here we only board one. Yeah.
Hi sir, there was a clause on mandatory listing of issuers based in IFSC in the 2021 listing regulations, which stated an issuer incorporated in IFSC and desirous of issuing debt security shall mandatorily apply for listing of its debt securities on a recognized stock exchange. This regulation now stands deleted.
Yeah. So that was that's what I'm saying. This was an old regulation. The old regulation. So essentially, an international regulator never can carries these mandates as far as domestic. As far as mandatory listing, etc., is concerned, it's because listing is a choice. Because by listing, you want to make yourself be available to public scrutiny, open your instruments to be traded by international participants. To non-private participants. So it has to be a choice. So that is the reason why we have sort of brought in that rule. First of all, companies incorporated to the IFSC are less. Even then, there is no mandate.
Okay. Can a US LLC list in IFSC?
Yeah. Yes.
Okay.
Any company which is not in the FATF blacklist, they can in the country, that is, which is there in the FATF blacklist, can come.
Though you have already mentioned, someone is asking, sir, ISIN with NSDL, CDSL and tri-party agreement with Indian RTA, whether it is required.
So RTA is not needed, but there will be a need for you to enter into an agreement with the local stock exchanges here, that is India INX or NSIX, depending on which stock exchange you choose. There will obviously be a listing agreement.
We have only a single depository here. It is international depository.
Yeah, yeah. IIDIS.
Can these regulations be used for existing entities for one of the new projects, which is going to be a separate legal entity?
Not an issue. See, we don't have an embargo on the objects to the issue. If that is what actually I recognize by this answer, this question, is that can you borrow money only for a specific object? So that is not the case. You can say that I am going to borrow for myself or I am going to borrow for my subsidiary. Both are allowed. You can say that I am borrowing for general corporate purposes. That is also allowed. You can say that I am borrowing for a plant or for services. That is also allowed.
You can also say that you're borrowing to get expand your business globally.
Yes.
That is also allowed.
Okay. I think I've read out all the questions that has been received. And if you want to give any concluding remarks, you can kindly give, Mr. Pradeep.
Yeah, sure. Akash, you want to say something before I want to summarize?
Yes, yes. Thanks for this opportunity. One more thing is that you can visit our website, IFSCA website. We have done an elaborate job of explaining all the regulations in a brief format and normal format as well. You can go to IFSCA page under listing is there. You can get a brochure on the listing regulations as well as the listing rules and other notifications that are being put up.
Yeah, in fact, Akash has actually very lovingly prepared that brochure. It must be something which all of you should actually see. It is freely downloadable. It's available on the IFSCA website. It gives a very granular and I mean I should in fact say both granular and broad. So it should not be. It's not as tedious as reading a regulation. So it's like it gives you simple simple bullet points as to what an issuer should sort of look at, or maybe even an investor can look at, or even a compliance officer shall look at. So, firstly, I should say that I should thank ICSI for this opportunity. Thanks, Mohanji, and thanks to ICSI. Because ICSI, as we all know, is we create governance professionals, and I am proud to be a company secretary myself. We create governance professionals, and we are the people who have to sort of take this to the issuers and investors. That first of all, there is something like this, because we ensure compliance and we need to know what the rules are. So thankfully, a platform has been created by ICSI to meet compliance officers and others and get to know. So we will continue to be in dialogue with ICSI. We are happy to do a lot more such webinars in different places, or even other seminars in physical mode. We are very happy to do it. So in case of any questions, feel free to reach out to us. As always, I have done that even when I was in SEBI. So don't worry. So in case you have any questions, any clarifications, or any suggestions, feel free to reach out to us. Thank you so much. We are very happy to be part of this.
Thank you very much, Mr. Pradeep and Mr. Akash. It was a very informative session, and the presentation was very useful. And Mr. Pradeep always pitched in and shared his inputs throughout the presentation, and I'm sure it was very useful for all the members. Friends, company secretaries have multivarious opportunities as far as IFSC is concerned. One, as a compliance officer, wherever company secretary, particularly in Indian company, going to raise funds abroad, so compliance officer will be mandatory. And again, all the companies which will be listed over here, practicing company secretaries role also will be very important. And we can also play a role of merchant banker and many other, throughout helping the IPO process company secretary professionals can play a very vibrant role here. As Pradeep ji rightly mentioned, India is currently fifth in the GDP, and I'm sure it's only a matter of time that we will reach three, and then it will be three countries which will be really powerful: US, China, and India. And I mean, that's the role we are all playing here. Be it IFSC, be it company secretaries, we are all part of this whole process, helping the Indian government to grow India as a country. And I'm sure, I'm really glad IFSC is playing a very wonderful role here. We are glad that already debt securities like Shriram and Avas, they are already listed. And from what Mr. Pradeep says, maybe in a couple of months, first equity listing also will be happening. So we all know that IPO is the craze now, and I'm sure once IFSC starts the IPOs again, you will definitely get the support from the investors, not only from India, across the globe. So thank you very much once again for your taking time, and around 2,500 to 3,000 members have joined and participated. I'm sure it would have benefited all of them. Last but not the least, I thank entire team, ICSI Secretariat, Ms. Deepa and her team, also President and Mr. Manish Gupta for organizing this webinar. Last each and every member who participated despite being a working day. Thank you very much. As rightly pointed out by Mr. Pradeep, any questions, any queries, you can definitely reach out to IFSC. Thank you very much.
Thank you.